off. Give us a little bit about your background and the fund.
Thank you. So my name is Samantha Ori. I work with the Ouroboros Group. We're a lower middle market private equity firm based in Boston, Massachusetts. We focus on consumer, healthcare, and manufacturing and services sectors. And our sweet spot is really somewhere between 5 to 200 million in top line revenue with proportional EBITDA. Mainly we do buyouts, but we do look at select growth investments as well.
That's great. I'm Rick Purple. I'm the CEO and managing partner of Firelight Capital Partners, which is also a lower middle market consumer brand focused platform that's partnered with a marketing branding firm called Yard here in New York. We like to invest in the healthy living space, fashion, apparel, accessories, and footwear, beauty, personal care, and pets. So it's a dynamic that comes back from my previous experience. I ran the retail consumer vertical for Irving Place Capital, the successor to Bear Stearns Merchant Banking. And again, size-wise, very similar. We look for companies 2 to 10 million EBITDA, 20 to 100 million revenue, where we could deploy somewhere between 10 to 30 million of equity. We like to partner with founders. We do everything from minority to slight majority deals. We do look at LBOs, but more often than not, we're looking for partnering with founders to help them grow their business.
I'm Jill Margetts with Centerfield Capital Partners. We're a mezzanine and equity shop out of Indianapolis. We target companies that are 4 million of EBITDA to 15 million and revenue of say 10 to 100 million. Companies that we focus on are, we're generally agnostic, but we've done a number of deals in manufacturing, business services, distribution, and healthcare. And within consumer products and services, we've backed 22 platforms out of the 62 businesses that we've invested in since 2000. We're currently investing out of our fourth fund, 335 million SBIC fund. And those consumer products and services business have been in automotive aftermarket, health and beauty. We've done some deals in housewares, clothing, pet products, and outdoor recreational products.
Lou, did you want to say anything to kick it off? No. Are you sure? Okay. Okay, we just want to stay on schedule. Okay. So thank you everyone for the intros. So our panel discusses a lot of things about consumer and retailing, but a big part of this will discuss branded versus private label. So we want to start by discussing how retailers are increasingly creating their own store or private label brands. So you walk into a Whole Foods these days and you see 365. Nordstrom's has its own brand called Halogen. Kirkland, obviously, people know from Costco. People are buying these brands, quote, people are buying these store brands. From a consumer products perspective, what kind of risks or opportunities does this pose to actual branded consumer products companies? Jill, would you like to start us off?
Sure, and within the retailers' private label space, that's really ramped up a lot since 2017. In fact, the growth in the private label space has outpaced the branded space within those retailers. And why are they doing that? Really, it's they're answering the consumer demand for value products. And of course, it enables these retailers to get a little bit higher margin. So on average, maybe 25 to 30% higher margins on private label products. And then finally, they're going to gain exclusive access to a brand by having it only in their stores. So, as a consumer products investor, one of the risks that poses is of course minimizing our ability to sell branded products. But we've really been able to capitalize on this interest in growing private label by also providing private label products to these retailers. One of the things that we've noticed is that it does cause our margins to come down, but we're able to offset that by increasing volumes with these retailers because they're able to push so much higher product through their stores. They're interested, obviously they're more vested in the success of that product line. And then finally, on the back end, we do not have to invest as much in the marketing to move those products. One of the risks there for us backing or supplying private label products is that we have to increase our working capital to support that product line. And obviously you want to be well capitalized if you're going to have to increase your working capital. It increases can increase your customer concentration risk with that retailer, and of course your inventory risk. If you're going after a new product line and it doesn't do well, then there's potential for some obsolescence there. But typically you can partner with that retailer in taking on a lot of that risk. You want to make sure that that's a captive product line for you. So, in early negotiations, before you take on a large product like that and use up your manufacturing capacity to support it, you want to make sure that that's not going to be rebid on an annual basis. And other ways to really ensure the stickiness of that relationship would be to try to gain some of the IP, either through direct patenting or some kind of proprietary process, and to manufacture that product such that when it is successful with the retailer, it's very difficult for them to switch because your competitors can't make something similar. Also, if it's, say, a pet toy, for example, if you can own the molds for those products and the designs, you might be able to differentiate there.
And just to pick up on that, I mean, one of the big risks of that, of course, from a private equity perspective, which we've seen a lot, that happens a lot in the marketplace, when you have, for example, Target, you're making a lot of products for Target, and you're creating your own brand for them, whether it's Cherokee, Isaac Mizrahi, and many others, you rely so exclusively on that retailer renewing that contract. And you look at Cherokee, that company's a disaster because of losing Target after 20 years with Target. So people say, well, I've been there 15 years, I don't think it'll happen. Well, it can happen because they look at the margins, they might be struggling themselves. They're trying to figure out how they can capture that margin. So it is tricky. And the other side of the coin of that question, which is what does it do to consumer brands, which I think Julie was also asking part of that question is, we've had private label consumer brands forever. I mean, the Safeways of the world, grocery stores started that trend, I think, a long time ago. Drugstores picked up on it. What's so interesting today, you give a lot of credit to, the Nordstroms of the world, sort of a John Nordstrom brand and others. It's not looked as a third-tier brand anymore. I take pride in my Costco luggage, that Kirkland brand. People don't tease me about it as much as they used to. So you look at the difference today, I think, in private label brands. They're not looked at as the cheap third-tier brand, I'm just going to save money. They're actually looked at it if they have the authenticity and the background from that retailer and the private label company that's doing it. It actually can really resonate.
And on that point, Rick, I know that you've had some direct experience with some of your portfolio companies, Vitamin Shoppe and Pet Supplies Plus, on this issue. Do you want to share some
Sure.
of those stories?
So years ago when I was at Bear Stearns Merchant Banking, I led the acquisition of Vitamin Shoppe, which at the time was about, I guess, 20-30% private label. So it wasn't we as a private equity firm that really helped launch that private label. The founder, who was so brilliant, had built a triple channel retail in the 90s and fairly quickly figured out he wanted to develop his own private label because the supplement industry has so many brands, and just the name Vitamin Shoppe alone had a lot of authenticity behind it. He started his own private label line ahead of most other retailers in the space, and he built a very, very successful brand called Vitamin Shoppe. And we built some fighter brands underneath it, meaning lower end brands that were more basic, not Amazon, but basic. And so that business ended up being one of those profitable parts of the business for many, many years. Pet Supply Plus, which I led the acquisition of in 2010, was just the opposite. They were asleep at the switch. They had no private label. So when we looked at the opportunity and all the things I'd learned from Vitamin Shoppe and launching private label, after a few years of owning Pet Supply Plus, we launched private label in the food category. Spent a lot of time trying to come up with a name for it because the first thing you have to figure out is what are you going to call it, right? You're probably not going to call it Pet Supplies Plus because that's probably not the best way to lead to your customer. We didn't have the authenticity that a Vitamin Shoppe had. It was just a very good pet store, but not had the brand recognition for a brand as a product. So we spent a lot of time trying to come up with a name. We came up with a name called Redford Natural. And then the question was, where do we want to position it? So I don't know how many of you have pets, but think about Blue Buffalo and many of the other top brands from and others. We try to figure out, do we want to be an $80 bag or do we want to be a $55 bag? And we felt that positioning right, we wanted to be at the $55 level. So we didn't have the highest end of products in terms of the ingredients, but we had a really good product at a value price point. And then the next question you ask is, well, nobody knew that brand. Why would anybody want to buy Redford Natural? And so the way you do that as a retailer, one of the ways you can do that as a retailer, is you've got to bring in your customer and teach them. So in the pet category, it's a lot easier. What you do is you get someone to try it, and you give them free samples. You train your sales force to understand and give them free bags to feed their pets, because they're all pet lovers. They work in the store. So you have an enthusiastic salesperson, you have an enthusiastic customer, you wean them slowly on Redford Natural. And today, 3.5 years after the launch of Redford Natural, I think it's the number 2 or 3 selling pet food in the stores out of 500 stores, so it's become a big business. And when you think about what does that do to the other side of the coin, are you competing with your own consumer products that you're selling for other brands? Yeah, it does, but you've got to sort of pick and choose how you're going to attack it. There is some channel conflict as a result of that with them, but at the end of the day, I think it's so understood today about private label, it's accepted.
That's right. So on the other side of the spectrum, away from private label and even sort of the value-based brands, you have the luxury brands. And luxury brands, obviously, high-end premium, that $85 dog food versus the $55 or probably even $155 if it's luxury. What kind of, today in today's world where consumers are really valuing customer journey, customer experience, even for all brands, but certainly for luxury brands, what are the expectations, Sam, for a luxury retailer or a luxury consumer brand that consumers are driving in that market?
That's a great question. So today, you're seeing a complete shift that you did even 5 years ago. The ultra-wealthy clientele is now interested in discreet luxury. They don't want the branded Gucci and the branded Louis Vuitton. It's actually ostentatious and can come off very tacky in an inner circle of friends. Now you're looking more towards this discreet luxury where if one person is buying something, then the other person only knows about it because it was shared, just maybe via a quick conversation, and that is now kind of the new luxury. And if you're not in that inner circle, you would have no idea how expensive this item is. So to give you kind of an idea, Salt Strap is one of these really interesting companies. They're literally a $200 strap that you can put on any bag of your choice, and it's very high quality, artisanally made, and over and over again, you see these straps, kind of around town, but you have absolutely no idea how expensive they are unless you are within this inner circle. So Goyard was very famous in doing this about 20 years ago, and it used to be kind of a discreet trend, and now everyone that you see on the street, you can recognize it as a Goyard. So that trend is kind of past, and now you're looking more towards new discreet luxury. Another example of this is they're called number 6 clogs. They look like your average shoe. Honestly, you would have no idea that their starting point is $300. So it's just kind of one of those interesting trends. And now big brands such as Gucci and YSL are having to compete with their more ostentatious products and creating a more westernized product for the American consumer who doesn't want to have such branding. So one trend that you guys may be aware of is the dirty shoe trend. You are literally paying $1,000 for dirty shoes. They actually, Gucci, they start at $650. YSL retails for a little over $1,000. And they're pre-scuffed up for you. They're more expensive than their starting price. And people have been wearing them and flaunting them. And if you're familiar with the trend, you recognize that to be a very expensive shoe. So one challenge, and I do want to caution that this is only for the American and westernized audience. In Asia, it's completely different. There's still this lust for ostentatious looks, and Gucci, again, has been showing that. Their line this past year has been very Asian-focused. trying to get the wealthy Asian clientele, but they also need to satiate the American audience as well by creating this other discrete luxury portal. So it's been very, very interesting to see.
Really interesting.
I don't feel as bad buying ripped jeans for your daughter now.
You shouldn't.
Yeah.
Don't feel bad. People
Um,
think they're expensive.
I want to throw
Yeah,
something
go ahead.
hypocritical about it, which is, I've never quite figured this out, but when you, I agree there's a lot of discrete luxury out there, and it's a cool aspect of luxury today. But then, and millennials will talk about, they don't want, they're not brand conscious, and then you walk the streets of New York, and I was just talking to somebody about this, you can't have a more obvious logo or label than Canada Goose, and it's on every single brick and mortar street. So you hear this, well, they don't really care about brands. Well, they really don't? It seems like they do. So, I'm not sure where you come out, although in today's world, certainly the value shopper's there, aspirational luxury has been there for a long time. And you think about companies like Supreme, they got $1 billion valuation for scarcity, right? So it's still, there's a cool factor of like, I got this and you don't, right?
Absolutely.
So I'm not sure where brands come out in terms of the discrete, and there's a place for it, but I think there's still a strong place for brands that we see over and over again. Montclair had a phenomenal brand, then came Canada Goose, and along come a couple others pretty soon.
Yeah, absolutely.
So true. Although I did hear that Canada Goose was very 2017. Like it's already behind us.
I will.
$3 billion market cap.
Right, exactly. Not so behind us.
I will say that there's a delineation between functionality too. Some people are willing to bypass that for the functionality factor. And Canada Goose, before it was heavily branded, they used it as the Arctic jacket of choice.
Right.
So it was actually highly functional. And today they made it into kind of this luxury brand to compete with a Montclair, which is arguably not as functional in a, I guess, winter test. So.
Right.
Well, and two, in terms of the, who are the first movers to that product, yes, it's probably past it for them, but there's still, a number of later movers to the product, particularly come from the Midwest, right? Those trends tend to come a little bit later and stay a little bit longer, I think, in fashion. And maybe it's a little larger market too than those that can afford everything as it first comes out, or the more scarce items.
So we talked about private label brands, and then we've also talked about luxury brands. And now we're going to move into digital brands, which really isn't a brand, but it's more of a distribution or a channel. The whole rise in consumer of the DTC, or direct to consumer, and the DNVB, digitally native vertical brand, for those who may not have heard of that term. And these are brands that have started on the internet, typically on their own website. So not necessarily selling through Amazon. That's not a digitally native brand. It's a digitally native brand when it's Casper that's selling their mattresses through their websites. And these have evolved. Clearly, over the last several years, it's been sort of all in the news of these DTC and DNVB brands, but they've evolved into those that are selling on Amazon and in other channels, other digital channels. They've evolved into other retailers. So Harry's Razors is now being sold in Walmart. Casper has its own stores. So it's evolved into other brick and mortar. So the question is on those DNVB or digital brands, we'll kick off with Rick here. Why are these brands, why do they have such a loyal following? Why are they all of a sudden sort of the flavor of the day? How did they take off so quickly, and why? And also, are the presence in brick and mortar, do they successfully extend the brand, or do they dilute their brands? You want to give us your views?
Sure. It's always a little bit of a mystery how some of these brands take off, but there's some good examples as to why for others. So, for example, you look at the Warby Parkers of the world, Dollar Shave Club. They were disruptive. So they created something that, didn't exist before. They took the margins in the eyeglass business that people were charging a fortune to make. It was really a controlled monopoly, and found a way to make eyeglasses just as well for great margins and a lot less money. And they did it online, and it took off, and it was actually a solution. It should work. Same thing with Dollar Shave Club. But then there are other mysteries when you wonder, like how a particular apparel brand, we were recently looking, I can't mention the name, we were looking at a lingerie company that grew very quickly over the last 3 or 4 years, and you're like, how did that happen? Well, in today's world, with transparency that we have using social media and digital, you have the ability to use influencers. Kylie Jenner is worth $1 billion, and how did that happen? Because she's a celebrity. She got caught. She has, 80 million followers. So you can develop your own following. You can develop your own blogs and have people follow you. The real successful, I think, digitally native companies have developed that storyline and the digital following to create that authenticity. I don't know if the product in many cases lives up to the hype sometimes, but in some cases it certainly does. But that's how you sort of really get the traction. If you look at the mattress companies that you were mentioning earlier, Julie, we've looked at a lot of them, and they're getting that traction because they're spending a heck of a lot of money. And so the cost of acquisition, and we've looked at a bunch of them, cost of acquisition keeps getting higher and higher, and they don't make much money, or if any. So I'm not going to pick on any particular ones. I'm not sure I know any that make money. But that's how they built that, built on the back of marketing. But the ones that, to me, that are the stickiest don't do it with the marketing and buying the customer. It's telling a story. It's being authentic. So you think about companies that, if it's in the apparel space, you mentioned, for example, Canada Goose. It was known for its technical apparel. It wasn't an online business, but it got its authenticity because of where it's from in Canada. And when they started to build their online business, they could tell the story. And so if they started that way, they'd still be able to tell that story, and people would buy into it because I could wear a Canada Goose jacket and it would protect me from 40 below. Not that I'm ever at 40 below, but which you don't need. But so I think it all comes back to the ability to use blogs, influencers, Facebook ads. There's so many ways to build it today without taking a commercial to the Super Bowl. So it makes it a lot easier, but you got to be able to tell a good story.
Anyone want to talk about the extension into retail and how that helps or detracts from those brands? Sam or Jill?
Sure, can take it. So one interesting thing that we've seen over the past several years is brand collaboration. It's been a big deal with big box retailers. Target is the first one that comes to mind. Missoni for Target was highly successful. You see it over and over again with Stella McCartney for H&M and Vera Wang for Kohl's. And it basically gives a way for these big box retailers and these luxury brands, what some consider luxury brands, to open up their demographic and expand their target market. So you will have a Walmart or an Amazon or a Target trying to get upper echelon customer and vice versa with the luxury brands. And what this also does is it opens up the portal for private label. So as you see, Amazon and Target and Walmart have multiple private label brands at this point. And the reason that they're able to be so successful is that they get this new demographic of audience in, and they woo them with an already existing brand that they may or may not like. And then later on, they'll come in and they'll see the private label, and then a lot of them are their millennial audiences, many of them, and they come in and they want kind of the mom and pop, less branded feel as well because they're fickle, and they come in, buy it, and then you've got a new customer for life. And obviously the big box retailers love this because it saves margin. You're cutting out the middleman, and so it's for them, it's a great acquisition cost to collaborate with these brands. So everybody wins.
We'll touch on stores as an example, actually building brick and mortar. I'm a big believer in you want to deliver the product to your customer the way the customer wants it delivered. So, and I think most people think that today because it's all about convenience. And so you've got to play in every channel, and you end up competing against yourself. So, people who are selling on Amazon also have stores. PetSmart bought Chewy's, which is competing with their stores, and maybe someday they'll figure out how to integrate it. But when you think about what you have to do, you have to deliver the product in the most convenient way. And the part about building your own stores is both about convenience, but it's really also about awareness. And so you think about how do you tell that story best? Feeling it in a store is different than feeling it on a website. And so you'll see, and I'm sure many of you have been to these, what I call flagship stores, where you walk through the store. Filson just opened up a store on Union Square, and it's a fantastic store. I'm sure it cost a fortune. It probably cost $1 million to build a store, which is another issue because you don't make any money. But but it's telling the Filson story. And if you build on that, you invite the bloggers to the store, you get them to feel what for example, a Filson's all about, it'll enhance that story and ultimately make you more money through more revenue and conversion. And so I think that the mistake that I think people made years ago, in the past we've owned some apparel retailers that remain nameless, and we may have opened too many stores at one time, and then it's hard to manage. And also, managing retail stores is a totally different business, for a digitally native company. They have no idea how to manage retail, managing retail salespeople, how to pick the real estate. It's a wholly different art. So one of the things that we try to do is make sure that as we look at these companies, we've got the right people in the right seats to do that. But I think it's important because I think you want to sell products in every way you can.
I think that's right. And it creates conflict. And so the point that you mentioned in terms of channel conflict, I think is real. At my firm last year, we represented one of the disruptive mattress businesses that was profitable, called Tuft & Needle. And we sold Tuft & Needle to Serta Simmons last year, the big guy, the legacy, non-disruptive brand. And Tuft & Needle had never raised any outside capital, unlike Casper and many of the other guys. So maybe that's why they were forced to be profitable, but they had a very different model. But Tuft & Needle was selling a big portion of their mattresses on Amazon. So you talk about the conflict, okay, because Amazon had these cheap mattresses that they were getting from China for, $200-300, and then they were also selling, through Amazon, the Tuft & Needle and other brands. Major conflict. So when these brands have, when you have to manage that conflict with an Amazon, with the other very large behemoths like Costco and Target and Walmart, how do those brands manage that conflict? You have channel conflict, but also clearly an important channel for them. Jill, you want to take that?
Sure. So, we have a lot of retailers, or consumer products companies that are already in the big box retailers, and most of them are online in some capacity now. But say 5 years ago, a lot of them were kind of looking to move online, and just in the past couple of years, a few that weren't were saying, we're not sure if we want to go online and compete with our customers. And we really like to sell to Amazon or through Amazon, but we don't want to make our large, and a lot of these big box retailers, just by nature of the industry, you're going to have a customer concentration with one of them. Well, we'd start to look on Amazon, and then all of a sudden we found our products are already out there. So we had been, and this happened for more than one company. We would sell to maybe a small e-tailer, and they already had our products out on Amazon. And if you look on Amazon when you buy a product, it would look like it was from the manufacturer. Now, obviously, when you go to purchase it and the fulfillment and everything, it does say who's fulfilling that. But it just goes to show you that competition is already out there. That channel conflict is already out there. And for the most part, we were more worried about it than our customers were worried about it in the long run, and didn't get a lot of pushback when we did some of that transition. Ways to kind of balance that conflict would be to offer limited product lines online if you're just starting to go online, or maybe a more for discontinued product, or just certain brands as opposed to product lines, but certain brands that you would be your retailer brand and your online brand, and it might be a similar product behind the scenes, but on the face, on the surface, the brand is different.
Yeah, the only thing I'd add to that is that one of the difficulties is pricing. And so if you're selling on Amazon, is to make sure, if you're doing fulfillment, is to control the front end of it. Because at the end of the day, what I think Jill's talking about, the resellers already causing a problem selling a product at lower cost, which create a big issue. You have to clean that up and spend a lot of time getting rid of the resellers. But it's trying to control the pricing. Because that's one of the biggest issues that you'll find across the channels of distribution. If you have different pricing, you're going to get a lot of problems. You have a lot of problems, a lot of conflict.
So moving on to a different subject that Rick touched on in terms of advertising. So the world of advertising these brands has changed dramatically over the last decade or two. The rise of social media and influencers are taking away marketing dollars from the traditional print, radio, TV, advertising dollars. how does that influence? Is that only a millennial phenomena? How does that influence all the folks here? Not everybody here is a millennial. Certainly not me. Sam, how would you say that brands have to utilize the new world of advertising today?
Yeah, so I completely agree with you. It's not just a millennial thing. It's an everybody thing. You're now seeing this need for on-demand products, and a lot of that has been the manifestation of Amazon. They have basically trained everybody that you can expect something either today or tomorrow if you have a 2-day shipping, and you don't need to pay anything for it if you're an Amazon Prime member. But I mean, I noticed this even with myself and with others. You go on any other website and it takes 4 or 5 days, and you start calling, where's my product? But because of this, and because everyone has been trained for instant gratification, big brands now have to be very smart with how they're advertising. So they're going to have to do this kind of social media push through Instagram that's pretty aggressive. They also have kiosks and even vending machines to kind of counterbalance this. A lot of makeup companies such as Benefit now have vending machines. You may have seen them in the airports. You see them in Grand Central, and you can basically get makeup on demand because there's so much noise. If you were to go into an Ulta Beauty or a Sephora, they need to make sure that you see them over every other brand because consumers have been pretty desensitized, and this is something that a lot of media has been kind of having to face to get smarter here. So.
Yeah, I'd add to that, I guess, and totally agree, it's not a millennial thing, it's a technology thing.
Yeah.
The world's changed, I don't care how old you are, pretty much everybody has a smartphone. If they don't, they don't live in this world. But so it's technology has changed, it's not millennials. And while we all may shop differently, we all still use all the technology to take advantage of it. So when you think about the days of TV advertising, I mean, I don't know how many people here watch ABC versus watching HBO or cable shows that have no commercials. It's not the same avenue in the monopoly on the major stations anymore. So when you're advertising on TV, and it's still done obviously a lot, it's just a question about who can do it and what makes sense. So I think when you think about, especially you asked about smaller companies, how do they get started? I mean, it's not on TV, and it never was, but it's about the ability now to be able to do it very inexpensively through the modern means of using infomercials that you can actually do fairly cheaply. It's from getting some influencers to start writing about you, which doesn't cost that much money. So there are many ways to do it to get known.
Yeah, exactly. And technology, moving on to the next question, technology is a huge influence in everything. So the rise of AI and machine learning and understanding customer metrics is also driving these brands in a very different way. And it started with when you were buying a book on Amazon and it would recommend other books, or you'd buy something, you create a playlist on Spotify and it would recommend if you like these, you might like those. And now it's, clearly across the entire realm of not just consumer and retail, but it's healthcare, it's banking, it's everything that relates to a customer experience. So how are brands working within this new sort of world of customer metrics and personalization? And if they don't really know their customers, what is that a detriment? I mean, are the ones who really understand the metrics behind their customers the winners, the leading brands? How is this playing into brands? Sam, you want to kick us off?
Sure. No, absolutely. So I think that a lot of it, and can I touch back on the millennials a little bit too? So private label, I think, has been the answer for a lot of getting consumers and also millennials, reinterested in brands. And I think that a lot of it has really been because there is a cheaper factor, because since you're saving on the margin, you're also able to give a lower price point. So millennials and non-millennials alike are able to kind of capture this trend. You see it a lot with, there's a company called Brandless. I don't know how many of you are familiar, but SoftBank put millions and millions of dollars into Brandless. And probably never heard of them because they don't advertise very much, but they're competing with Walmart, they're competing with Costco, and all of these other companies. And I believe that in the future, this will probably be the new big box retailer, and the anti-brand, if you will. And I think that you're going to start to see a shift as well in kind of consumption. So millennials, as many of you know, they are asset light. They don't own a car, they don't own a house, and they don't want furniture at all of any sort, or any sort of decor weighing them down, which is why you're seeing a lot of big brand furniture companies going out of business, and why Wayfair and IKEA have been so successful, because you can get furniture at a cheaper price point. So a lot of the upshot of this is that you're starting to see these millennials buying yoga pants and personal care products, and products that they can bring with them so that they can go coast to coast, they can go out of the country, and they don't have many assets. But of course the upshot of this is that eventually they're not going to have the accumulated wealth that the generations in past decades have had, which will be a new problem. And again, the brands will have to reiterate, once again. But one brand that I really like that I think is doing very well, not just for the millennials, but also for just the entire population of people who wear makeup, is Ulta Beauty. They've been a really, really good company who they've been able to reiterate themselves into not just a department store and not a drugstore, but their own entity. So the fickle millennial can basically go in and they can say, hey, today I'm going to spend $200 on makeup, and then the next day I'm going to spend maybe $15 on makeup. And they have hit such a wide target audience that they've seen such success because they've been kind of everything to everyone. So yeah.
I think too with with some of these, you're talking about private label being of interest because it's a lower price point, but I think millennials and just most people in general are not just necessarily looking for a cheap private label. They're looking for a value product, whether that's in the low-end price range or in the high-end price range, and that's really what private label and retail brands bring to the consumer.
I want to pick up on the data point if I could. This is on the heels of everything we're talking about, the ability to collect information about your customer. I have a pretty black and white view. If you're not getting customer information, you're not going to win. It's pretty simple, because people who are collecting information, the personalization that's demanded by the customer today, I mean, it's such an extreme how much information is available. I don't know how many you have Amazon Echoes, but plenty of people are throwing them out because they listen to your conversation and they talk back to you sometimes without being asked. And I don't know how you cover up the camera on your computer because maybe somebody's watching your every movement.
They have companies that have that. They
Well,
make them
I
out.
am well aware. And Facebook's gotten in a lot of trouble. So that's just the amount of information and data that's out there for consumption. So as we look at companies, the ones that are using Amazon all the way through, even for fulfillment where they don't actually own the customer, it's really tough to really value them because it's almost looking at them kind of like a wholesale customer. They can, the ones that are just using fulfillment, so it's FBA, so they can actually control the pricing, and so it's somewhere in between. They don't have the customer, so they can't do the personalization because they don't know what the customer's looking for other than looking at the buying habits of what they're selling. So to me, there are a lot of these data analytic firms, I'm sure you guys have seen many of them. They've gotten so sophisticated today, the analytics, and we've used some of them to really help us really understand some of these digitally native ones, and even the ones that just are doing multiple ways of channels to sell. Because to us, when you think about paying a large price for something, you're paying for that data. The way to solidify that customer is knowing that you have the magic to keep selling for a long period of time, and how to adapt over time when the customer's buying habits change. Because it's not just what they buy from you, by the way, and you guys may know this, but you can scrape the internet and actually learn so much about all of us, about our buying habits, what we're doing, where we're shopping, what we're spending. Are we brand conscious? Are we not brand conscious? And so all these things are such incredible data points, and going through algorithms, you can be pretty scientific. Instincts still matter, but it's pretty helpful.
Yeah, I think 50 years into the future, when I'm ready to write my autobiography, there's going to be an app where I can just click a button and and Google and Facebook are gonna just work together and they're gonna all write my.
They do that now. They send you once a year pictures of the things
That's right.
during the year. They create a little album.
That's true.
It's not an autobiography, but your last year.
So, we've talked a lot about the millennial generation, and I know that there's an entire panel on this later, so we're only gonna have one question on it, but we touched on it here. And the millennial generation, I mean, they want a lot of things. They want everything for free. No, but they want a customer journey. Who talked about a customer journey 20 years ago when you bought something, right? 10 years ago, I sold a business called Rue La La, and Rue La La is one of the original flash sale sites, and we sold it to GSI Commerce, that was sold to eBay. But Rue La La was the first company that came up with this surprise and delight. You open the package, surprise and delight. And I have a current client who told me the same thing. When we open the package, you want surprise and delight. I thought, what is a surprise and delight, right? When did this start? So these millennials, they want something different. They want, you think about all the things that they're looking for in a brand, authenticity. Rick used that word several times today, right? Which is true, they want authenticity. They want sustainability, they want eco-friendly. They want a story behind it. They want a story behind their brand. So Rick, kick us off, and what is this whole phenomenon around millennials, and how are they changing the face of the consumer brand?
So I talked a little about this earlier in the storylines. I mean, when you look at some of the best examples, and some of the examples you gave, I don't look at as much about a story. Yes, it's a story, it's a surprise, but it's also a delivery system, right? It's convenient. So when you look at, I get 5 eyeglasses in a box, I pick the 2 I want, I can return it for free. It's kind of a story, but that's more about, to me, or you look at Stitch Fix and a lot of these others, BarkBox, these subscription models are, it's really great. I don't have to go outside of my apartment, I can just look at 10 different things or return it for free. The stories that I think about are more driven by, when you think about, think about, for example, the store story. Any of you guys been to the store story? No. So it was bought by Macy's, Richard Bauman has, of course. The store story was started by this woman, and it is a complete shopping experience. I think there's 1 or 2 stores. It was bought by Macy's not too long ago. But when you go in there, the store changes every month. So you go in there, and it has a theme, and they actually change the walls, the color of the walls. They change the carpet, and they sell a whole thematic thing every month, a different theme. When I first heard about this, I'm thinking, this is nuts. How do you make any money doing that? But it actually did very well because it was so well curated, and it told literally the story. Now that's an extreme example, but all these really successful brands, create an aura, and it comes from, we've talked about Canada Goose's aura. You talk about, we in my past, I bought J Brand, premium denim company, on behalf of my firm. And what was the story behind a J Brand? Well, the story behind it was we had a phenomenal founder who knew how to build a jean company based upon cutting edge. And what I mean by that is invented the skinny leg jeans. So the story was skinny leg jeans. Now, a lot of men out here probably, but some women probably know what I'm talking about. It's going to really date me here. But anyway, skinny leg jeans took over the jean market for a long time, and it was a great story to tell, and it was a look. And if you look at a lot of apparel companies, there's usually something special they've created, and they tell a story and wrap around it. It could be something as simple. We looked at a company, I can't say the name of it, but it's a company that was based in Europe, that was also an outerwear company. It was about staying warm, and it was a coat that fishermen wore to keep warm when they went out fishing in the 1900s. And it was a great story. It's an authentic story. And you could build around that and market around it. And those are the things that make brands more everlasting. And you got to keep refreshing it over time, but it's critical to keep the life on.
Jill, anything more to add on to that?
I think that was actually a
Yeah.
great lead into questions.
Yeah, that's great. So we want to stay on schedule, and we'd love to hear your questions from the audience. So feel free to kick it off. Everyone.
I have a question. I have one comment and one question. The comment is, Rick, you mentioned about stories and Warby Parker, the whole trying on 5 different items. But the other story that Warby had, which I think was the story that's sort of gone away, was the fact that they we're giving away one pair of glasses for every pair. And that sort of, I think, gone away because so many companies are doing that sort of thing now. But that was a big story in the beginning for them. But
Well,
my question-
Tom Shoe started.
Tom started it, exactly. Tom's was first, then Warby kind of followed, but they also
And
were
Tom's
both
made a lot more
disruptive.
money than Warby Parker ever made.
I'm sure. My question actually, Sam, was you brought up about the luxury brands and this sort of discreet luxury, and that it's kind of an American or North American concept versus more in Asia and some other markets they're not really following it. How are companies from a manufacturing point addressing that when it's the same company that might be dealing with different markets? So let's say Gucci, for example, in Asia, they still want to be ostentatious, for example, and in the US, perhaps a little bit more discreet. How is that handled?
Yeah, so it's interesting because in Asia, they have multiple manufacturing hubs, by the way, and they're very cute with how they manufacture. So in Asia, this is a cultural thing. But if you live in Asia, you do not want to buy brands that are manufactured in Asia. You want manufactured brands that are in France or in Italy. So what's happening is that parts of the manufacturing process will happen in the home country of Asia. We'll call it like Hong Kong or Guangdong is where a lot of the manufacturing happens. And it's assembled in France. You see this with Louis Vuitton bags, Prada, you see it with Ferragamo as well, and that's kind of how they're getting around that stigma. And they're also capitalizing and saving on the margin by still manufacturing in these Asian countries. And also in Bangladesh, there's a lot of manufacturing going on there to answer your question on saving on the margin and catering to multiple audiences.
Thank you.
Well,
part of the value proposition is, if part of the value proposition is collecting consumer data, how does this whole notion of privacy becoming more and more of a central issue to generations as they migrate forward, and private label, don't they both sort of converge to integrate that value proposition? Because it's going to be harder and harder to collect that customer data.
Well, private label, like Kroger, for example, they collect like 97% of purchases. They know what their customers bought, based on going through the Kroger card, right? So, they'll track everything and who buys what, and so.
They know the customer, the manufacturer that good has no idea. They're basically wholesale.
Right, so, yeah, I mean, just as a consumer, I mean, your data is going out both generally and, with some of the products, right? So if you're, the cookies, for example, they can track a lot of, and as you're clicking on yes here and there, and you might have some privacy settings, but still they're gaining some data that you're authorizing through your interest in accessing that site, right? So, so that, I don't think that data, the volume of data is going to go down as a result of the privacy restrictions. What you might see is maybe they might not have specific names to go with each piece of data, but they're building their marketing campaigns based on generalizations of demographics and other common interests, and a lot of it is linked through your clicks, on Facebook or Google or whatever. And if you see, even if you're reading, say, Yahoo News, for example, you're probably getting some ads through there that are based on who they think you are, and they're pretty accurate. If you.
And the other thing I'd pick up on to answer your question a little differently is all the credit card companies give that information to a lot of people, and I don't know your name, but if I'm looking to see what kind of, let's say I'm making a pet food product, I can find out what kind of pet food people are buying, all the demographics about those people. So that information I don't think is ever going to go away. To your point about the personalization aspect, on my own site, I certainly know it because you're my customer. And then the question is, if they take it away from, trying to scrape the internet, other ways to do it, that may have some effect down the road. But I think there's just so much data, and you're still going to be able to get what you need in a very important way. It's never going to be ignored at all.
and also, I don't know how many privacy policies that you've read that you get, those in that fine print, and you're clicking accept.
Yeah.
But I
I'm
haven't
sure
read
he's
that many.
very carefully.
Yeah.
I haven't read them, but I'm getting them now, so
Yeah.
at least now know that there's a choice. And
Well-
before that wasn't the case.
Yeah, and then you have something to go back to, right, if you feel that your rights have been violated
Yeah.
somewhere.
Yeah.
Yeah, I just wanted to ask you, obviously I'm not a millennial. My name's Tom. I've been 20 years in CPG with Kraft now, and cheese, and now Sundial brands. But I find millennials, I think they're different because they have access to things that the others have never had, and the ability that the world has shown for them. But I would like to get your point of view on their view of trust in the brands that they have. Because I heard the term fickle. So fickle to me tells me that they don't really care about the trust level and they're willing to jump around consistently. So I wanted to get your take on that.
Sure. So, yes, millennials, they're kind of hypocritical. I happen to be a millennial, so I can say this, but honestly, they flop back and forth. They want quality, but they also want a decent price. They want high-end luxury, but they want it to be sustainable at the same time. So it's very confusing to a lot of brands. And they want, healthful food as well. They want, everyone wants that. That is very true. It's just that the millennial, they've been exposed and been so desensitized to all of these brands because they're technologically, there's been such a push. Everyone has a startup, everyone has a concept, everyone can technologically push it on social media. So everyone gets very confused about what they want and what they're interested in. So they're taught to believe one thing in this PC culture, but they're craving something else at the same time. So it's a very detailed question, but at a very high level, I would say that it kind of depends on where they are in their life cycle of being millennials. If you're on a young millennial side, you're socking all of your money into experiences. It looks tacky if you have all of these brands or anything. You don't want to show up your friends. It's not about that. It's about the experience and just going in. For example, Tiffany's has been doing a lot of this where their sales have gone down recently because the millennial population can't afford Tiffany's and the higher upper echelon Tiffany's at least, and they don't even want Tiffany's anymore. So instead they've created a story type of brand where they're changing the look. You're coming for an experience, you're getting some champagne and wine, which everyone who doesn't like booze, right? So everyone goes in and they have a great experience and then they remember Tiffany's. But I would say that it really depends on what edge of millennial you are. If you're on the upper millennial end, then that might be a nostalgic type of situation to buy things that maybe you grew up with in your childhood that no longer pertain to I guess what a millennial would want today. So.
And the only thing I'd add to that, when you think about, to a credit to the millennials really, and also science, you think about today, millennials probably even more so than any other generation, is really focused on food ingredients and what they're ingesting. And I think they take it very seriously, and you look at the health craze and the fitness, it's a different aspect of what I grew up with. And while I've tried to get over there to that level, I'm nowhere near that level of millennials are. So I think they're very thoughtful and authentic about the ingredients and what they buy in food.
And millennials, what happens when they have kids? It's going to happen eventually, right?
Yeah, they'll be the young Gen Zers basically coming into the world, and you're going to see, well, they're not going to care about privacy at all, I don't think. I mean, you even see that with the old Gen Zer population right now. I mean, they're Snapchatting, they're hashtagging and say, hey, I'm over here. They don't really care that everybody knows everything about them because they grew up in a world where it never existed. Privacy never really existed for them. So I think you're probably going to see that even to a greater extent to the point where no one cares and they don't care if anyone's listening at any time as long as they're not doing anything wrong. So.
Right, but they have no yoga pants, they don't care about any kind of possessions, but then you actually make sense to have some possessions when you have kids because you have
That's the fickleness. Right. That's the fickle aspect.
They're starting to buy house. They want everything.
How are they going to have no possessions, but yet have to go travel with
With car seats.
Kids see it, whatever, kids are, don't.
Well, they're probably going to continue to buy things, I would guess, that are creating more efficient lives, and that's something that is an efficiency to them, but they're going to be spending less probably on high-ticket furniture items, things that they can't take with them, like bulky sculptures and art, and I think that anything that you're sinking money into decor, home renovations. I think eventually, when you see this, I happen to have my real estate license, and you can see this even in Manhattan and in Boston, where I'm from. Almost everything is a lease luxury building these days. You don't even have the option to buy, and eventually it's going to be very hard to find properties to buy. So you would think that the property level would go down, but it's actually going to go up because the demand is going to meet the supply, or the supply is going to go down, and it's going to be very challenging to find places to buy eventually. And I think millennials and the Gen Zers are going to be completely okay with this, and maybe no one will own a house 20 years from now. Not sure, but.
So, poor Sam's getting attacked because she's the only millennial up here.
It's okay, keep them coming.
I think we have a panel on millennials, which these questions are awesome, and we can continue the discussion, but we need to cut this one off. And I want to thank Jill and Rick and Sam for the discussion.